Hey guys, Mike here. So yeah, getting Google at $150, who knew or whoever thought that would happen? But obviously the company announced a 20-for-1 stock split, which will take place in the middle of the summer. And so we got a ways to go. But yes, I think the problem is when you get up to $3,000 a share, psychologically, a lot of people don't want to invest in it. So this is how you attract new investors. And so, what I want to do is dig into the research to kind of look at, apples to apple comparison of other big, not just tech companies, but big cap companies. When they do stock splits, how does the stock react? When is the best time to get in? Is there a time to get out? That kind of stuff. And so, that's something I'm going to show you here today because it might not be what you think. And so, you do want to be careful when you enter and when you exit, if you're going to be doing options, that kind of stuff. So I'm going to show you the charts and show you exactly what happened to a couple others just like Google. But before we get into it, I do want to say, it's time to celebrate, guys, and congratulate ourselves and congratulate our government officials because we officially passed $30 trillion in debt yesterday. We did it. That's right. We eclipsed $30 trillion in debt yesterday, folks. Let's give ourselves a pat on the back, give the government officials a pat on the back, and our debt now is made up of around 128% of GDP. If you look at those numbers right there to the left, we've never been anywhere near that close to that. And, hey, if you'd asked me 10 years ago what I thought we'd be 30 trillion in debt, especially this soon, I would have said no. But, I would be wrong. I mean, ask yourself that question 10 years ago. Did you think we'd be here this fast? And so, and trust me, it's a heat-seeking missile now, boy. It's going to be ramping to 40 trillion in no time. So, we like to be, number one at everything. So guess what? Congratulations. Number one in the world with debt. Love it. All right, so of course I'm being sarcastic because this is horrible. But the one good thing having that much debt does, it really limits how much the Fed can raise interest rates, right? So that's the one positive. Always look for the positive in everything. So, at this point in time, you just got to laugh at it because it's just so damn sad. But anyway, let's go ahead and get into exactly what's going to happen when, or actually from this point on until when Google does the stock split according to the charts I found and the other companies that have done this. And so like I said, Google announced 20-for-1 stock split when they did the earnings yesterday, and they absolutely crushed earnings. And you can see this morning when it opened up, look at that enormous gap up right there. I mean, whew, and just kind of kept going higher, but that is a huge gap up of how much, what is that, 6.5% right there. And which is interesting to see what's going to happen because as we know, about 90% of gaps actually fill, which would mean the stock will have to come down around 6% to fill that gap. So we'll see what's going to happen on that. But looking at the other ones, compared to, let's look at some other ones. And so you got Apple, obviously big, huge company worth $3 trillion. And you can see they announced one of theirs on February 11th, and the stock ended up running up around 12.5% until the split. Now this is a really fast split. It only took 17 days, obviously. And as you can see, what happened afterwards, though, it dropped almost the exact same amount in about 8 days after that one stock split. And moving forward into 2014, on April 23rd, 2014, they announced a split. Boom, stock takes off, goes up 25% in a matter of 47 days. They do the split on June 9th. Then the stock starts to run back down, but this time it only ran down around 5% over a 15-day period, and then proceeded to trade up a little bit, then trade sideways. And then if we move forward to the most recent, you got July 29th, 2020, or July 30, excuse me. And they announced the stock runs up 34% until the split. Then it does 3 days more of a run up, and then it tanks around 23%. And so moving on to Tesla, because that was one of the more recent ones as well, do we remember? This one right here, they announced on June 1st, 2020, the stock ran up a massive 183% until they did the split on August 31st. And then the stock tanked around 33% in a matter of 7 days. But as you can see, trades back up, runs sideways for quite a while there, and then proceeds to take off to where it is at now. And obviously we're in different times now, right? I mean, 2005, stocks were running up. 2014, 2020, we're in a massive bull run. And this year is a little bit different. I mean, as I'm recording this, Facebook just reported earnings, missed expectations, the stock's tanking after hours. And so, we're in a lot different volatile times. Plus you have Google gapping up like that. And so, you know, that gap will most likely get filled at some point in time here. And I don't think it's going to be too long, because remember, we got a long time to go when you look at those others compared to this one before they do the stock split. Those others, ones was 2 weeks, most of them were 2 or 3 months, and this one's almost 6 months until they're going to do this stock split. And so, you know, a lot of stuff can happen between now and then, but at least you see what happens is, normally what happens, they announce, it runs up just like it started today, and then after they do the stock split, you get a really good pullback on it. And then the stock will continue to carry on from there. And so obviously if you buy now, also if you decided you want to do that, and they did the stock split, you would get 20 shares. You wouldn't have just one, you'd have 20 shares. There'd be no more value in it than that. You just own 20 more shares. And the value of owning 20 more shares versus one share, if you wanted to sell some here, sell some there, you could. And so that's one other way to think about it. Or you just wait to do the stock split and, you know, it runs down, then try to get it below the 150 price, right? That's another way to look at it. And of course, if you're in options, well, I mean, you can make a killing if you can time it right. Just in this market right now, it's going to be a whole lot harder. If we were in last year, they would announce this. Oh my goodness. I mean, I think it would have done the exact same pattern, but I'm not sure that's going to happen now. But I just at least want to show you the chart, show you exactly usually what happens. Very high percentage, right? This is apples to apples. Like I said, those are two mega cap stocks, okay? Very popular stocks. Google is a popular stock and a formidable company, okay? I mean, they absolutely crushed earnings, and if we would have been in any other time than now, you know, the stock would be rocketing. But understand, if you look at the chart, if you pull up a Google chart, that $3,000 level, that's another thing to think about. It's like a psychological thing. It has a very hard time breaking through, and whenever it does, it comes right back down. And so that's why you're seeing them really do this stock split. So, you know, let me know what you think. Let me know if you're buying now, afterwards. And so, you know, the good thing is you got 6 months. And so, and for those who are already in Google, obviously you'll have a lot more shares come summertime. And so hope you guys admire this. Hit the like, subscribe button if you did. Really appreciate it. And I'll see you guys tomorrow.